Hi guys. I
I
think today will be another special coverage about the recent movement of the China's properties industry. So it's about Evergrande again, but not about their story, but it's trying to link back with another popular collapse that happened in US. I think about 10 to 15 years ago. And are they the same or not? I think this is something that we're trying to actually share with you more information. Of course, I think before it starts, all the sharing today for reference purposes. Don't take this as a buy or sell decision. And of course, without further ado, we'll go into today's topics, which is something that we wanted to talk to you about. And then, if as you can see, there's a few headline actually showing to us in the past 1 to 2 weeks, which with a summary like this, can is Evergrande the same like the Lehman Brothers crisis? Will they lead to a global collapse in stock markets and so on? And it's covered by a lot of mainstream medias and trying to actually give you uh, the fear, and it even caused a few days of shock in the stock markets that people are selling off the stocks. So are they the same or not? I'll pass to Jupan to actually take us through on understanding what Lehman Brothers crisis is all about, and are they the same with Evergrande's issue?
Yep, thank you, Chumbing. So I think that we are more or less familiar with the so-called very tighter or eye-grabbing headlines that we see regarding on Evergrande. But for Kaya Plus, we don't think that it is going to be the same as the Lehman Brothers. Hear us out on why, and of course, if you have any rebuttals and you think that it could actually be the same, do let us know in the comments as well. But before that, let us go through some of the brief history. And then make a comparison between Lehman Brothers and also Evergrande as well. So we'll go through a summary of what happened for the 2008 subprime mortgage crisis. So remember back then, during the year 2001 until 2006, due to low interest rates, there was a huge take up in terms of housing mortgages. Basically, that also meant that there was the housing boom and eventually the housing bubble crisis as we know of as of today. So back then, borrowing was cheap. Everyone wanted to take the opportunity to buy into a landed property or a property which they can live in, and that actually boosted up a lot of the property prices in US. And back then, there was also this famous financial institution in the name of Lehman Brothers. Back then, they weren't even in the mortgage industry, but due to the heated up and very high growth business and potentials of the housing or mortgage industry, they actually went and acquired two mortgage service providers in the name of Aurora and also PNC. So these two companies actually are the so-called companies back then that had the exposure to the subprime and also alternate A mortgage business. And to further understand or illustrate the terminologies used in the US mortgage industry, basically they mainly categorized into three categories. A, paper, which is the prime. So these are the so-called borrowers that have good credit rating and have debt to income ratio less than 35%. They disclose their wages and salary, and from the paper itself, they have the justifications and also the supporting documents that they are able to repay whatever housing loans that they are needed to acquire to pay. And of course, in the middle part of it is alternate A. So this is slightly riskier than A paper, but less risky than subprime. And at the bottom of the list will be the subprime housing mortgage borrowers. So these are the individuals who have difficulty maintaining their repayment schedule. They have low FICO scores, and they already have some sort of history in terms of defaulting repayments and also loans. And what Lehman Brothers actually bought into were two companies that were specializing in the alternate A and subprime. So these are the bottom tier in terms of credit scoring. So once you actually enter into a mortgage industry or mortgage business, sooner or later you'll be giving out money to people who wants to borrow money to make a housing installment, and you'll be holding on to a lot of mortgage, right? So how do you actually earn more on top of these mortgages? So what Lehman Brothers did back then was to repackage of the mortgages into a kind of security, and they call it the mortgage-backed securities. And because of the so-called repayment that they anticipate these borrowers to make on a monthly basis, it would generate some sort of an interest return. And they sold it off to investment banks, hedge funds, venture funds, and also the individual investors out there. So everyone actually has the opportunity to receive some sort of a dividend, or I would say interest repayment every time these mortgage house owners make their debt repayment on a monthly basis. But when things start to stop coming in, when the so-called loan repayments stop coming in, was the peak of the housing bubble. Too many individuals that are not qualified to take loans actually started to default on their loans, and that actually triggered what we know as of today as the subprime mortgage crisis, where the entire financial institution got trapped into this bubble, and we saw the huge market correction that happened back then in 28 and 29, right? So this was the story or the summary, basically, of what happened for Lehman Brothers and the subprime mortgage. Coming back to Evergrande. So just a brief throwback, we have actually covered in more detail. The video will be linked in the top side corner of on a more detailed version of this. But just to take you guys briefly through, something similar also happened in China. The property prices were also climbing and accelerating in terms of their price index as well. And one important info that we also managed to get was up to the year of 2017. You can see that in terms of the so-called empty houses, right? So China actually has a significantly higher empty houses, even though that property prices were booming. These houses, even after they were so-called finished, they were empty, and relatively, it's much higher than the other countries in relative like Japan, Taiwan, and US. So when you have houses that are eventually vacant, even after you finish, you will start to actually trigger a slowdown in terms of the selling price as well. And that actually exposed how leveraged China Evergrande Group was actually. As you can see right here, in terms of comparative analysis, their leverage is actually much higher than their peers and competitors. And you can see that even though they vow to lower down their borrowings, but in total terms of their liabilities, they are still actually at the increasing trend on a year-on-year basis as well. And if you look deeper into their balance sheet, you can see that a lot of these are actually constituting of near-term liabilities and obligations. So it's a company that is actually going or anticipating that they do not have enough cash on hand to service their near-term obligations. And we will also not go through this deeper. Basically, if you want a briefer, more deeper understanding, do check out the video in the link. So actually back then in the year of 2009, I would say, or 12. So he actually was a short seller of Citron Research, and he actually anticipated that Evergrande would actually become a crisis. And back then he actually got banned for his remarks and also his reports. But after 9 years, the report somehow actually construed to some truth, and actually gave his thoughts and also his opinions on why this ticking time bomb actually took 9 years to explode, as of you know, or just happening the past few weeks. So the question is Evergrande is going to be the same in as Lehman Brothers in the making? One thing you really need to understand is that Lehman Brothers actually cause a systemic or contagion risk in terms of how the financial markets actually collapse. Lehman Brothers actually packaged all of these dodgy or low quality mortgages into a financial product, and the exposure actually got sold across investment banks, hedge funds all around the world, and even individuals all around the world. Right? So that actually triggered a huge chain reaction that actually collapsed the entire world's economy during the time back then. Right? And if you look at Evergrande, it does have some sort of a similarity, but to really dig deeper into it, most of the Evergrande's debt and also the obligations are still relatively confined to the so-called creditors and also the financial institutions within China only, right? And before we go into the verdict of it, just a quick shout out to what we are doing for our Premium Club members. So we do similar kinds of analysis and also findings as well. So we have a dedicated private group where we have also share similar kind of analysis as well. And of course, there will also be private videos. So the last one we touched on was portfolio management. And you also have private articles and also reports on Malaysia companies and also companies listed in the US as well. And we also do have certain thematic kind of deep down research and analysis. So the one coming right up will be on cloud business models. So it will be at the premium membership of 488 per year. Do give us a check out if you are interested to learn more about investing and also about how we deep dive and our analogical thought process. So I think the most important aspect that we want to touch on is how are the banks in US, Singapore, and even Malaysia, are they going to get the so-called chain reaction effect that is currently hitting China quite badly, because Evergrande is actually going to pull down some, or I wouldn't say pull down, but actually going to impact some of these China banks quite hard because of the exposure they currently have with Evergrande. But the good news right now is that you can see for the banks in US, Singapore, and Malaysia, they have gave their so-called statements that they do not really have any huge exposure with Evergrande. And if these banks actually do not have that kind of exposure, as of right now, they could be relatively quite safe. And we talk about contagion risk and systemic risk back then. So what happened for Lehman Brothers was the problem started off within itself, within the financial institution. So when the bank actually fails, or when a financial institution runs into problems, straight away it already starts to trigger the chain reaction where it will pull everything down in a spiral. Whereas for Evergrande, the company itself was actually in a debt, and it stands to actually affect banks or the so-called creditors that have an exposure to Evergrande. But as we all saw just now, most of the banks in US, Singapore, and Malaysia do not actually have any exposure to Evergrande. The ones that actually might get affected would be the suppliers, the clients, the customers of Evergrande back in China. But if the current good news is that other banks around the world are not actually having this exposure or risk with Evergrande, chances are we might be able to pull off this crisis at a very, very safe rate compared to what has happened back in 28 and 29. And I think after what happened back in 2008, the so-called Basel III was actually expedited. So this actually ensure banks to have sufficient capital buffers. And then they also have some sort of a supervisory review process to ensure that whatever the bank records in terms of their buffers and capital, and also their risk-weighted assets, they are sufficiently labeled and categorized so that the bank does not eventually take on too much of a risk that can actually fail the bank and contribute to the next potential financial meltdown as we have experienced years back. So I think due to that, we are more than confident to actually say that Evergrande might not be the next Lehman Brothers crisis. And yeah, I hope that you find our explanation and theory exciting and beneficial to your understanding. Of course, the market will gyrate up and down due to the news headlines that we do anticipate to see on a daily basis. But I think at the end of the day, we have to keep calm and really understand all of these scenarios and make our decision prudently before affecting by purely by the headlines. So I think that's about it for today. I hope that if you really like our videos, give it a thumbs up and do share it to your friends and families. We'll see you in the next Not So Late Night show coming up right Thursday. Take care. Bye bye.